Hi, my name is Alex Carlucci with Gustan Associates. I want to talk to you about condo hotels. I'm the condo hotel specialist, and I don't do a lot of these, and I'm going to tell you why, because you're about to find out why. Traditionally, condo hotels fail because people don't like the terms, the down payment, the reserve requirements, the condo doesn't pass. People are looking for small loan amounts. There's a lot of reasons. So let's start off how I'm going to ask you if you call me about a condo hotel. I'm going to say, is it a hotel room? Is it just a one little studio? And you're going to say yes. I'm going to say, sorry, I can't help you. So that's the first no. So it gets rid of 50% of the people because everybody wants to buy these hotel rooms, rent them out to family vacationers. So that's the first one. Second one is if it's a one bedroom, yes, we're good. What's the purchase price? $70,000. Sorry, we got a minimum loan amount, not purchase price, loan amount of $100,000. So there goes another half of the people. So now we've got established that we need at least $100,000 loan amount, and we need at least to have a bedroom or a kitchen. Yeah, it can't be just a studio. It's got to have a kitchen in there. Now I'm going to say, what kind of properties do you currently own? You're going to say I have a primary in New York, and I got a second home in Colorado, and I want to buy a condo hotel in Florida. Well, what's going to happen is they're going to treat you as an investor no matter what you're going to use that property for. And if you're an investor in a condo hotel, the down payment requirement is 40%. It's a lot of money. So 40% down, and you got to keep the loan amount above $100,000. So it gets tricky sometimes. So with the 40% down, it has to be your money. It's investment, no gifts. You have to have a year's worth of mortgage payments, including the association fees in your bank account after you close. So there goes another half of the people. If you have a single family home as a primary residence, we can do this condo hotel that's in Florida. You live in California, you're buying a condo hotel in Florida. We can do it as a second home, 25% down. Same reserve requirement, a year's worth of payments in your bank account. We might have saved a few right there. We got a couple potential people there. So we got the second home, 25% down, or year's worth of reserves. Got to be over $100,000 loan amount. Got to be a one bedroom with a kitchen. So from there, I'll go on to the next one first. Let's say you don't own anything and you live in Florida and you want to buy it as your primary. You can do that 20% down. Need the reserves, need all that. So if you can get through that litmus test of the weeds that I put you through, that's the first set of questions I'm going to ask you. And then we're going to go on to the condo. Does the condo have any lawsuits against it? If it does, you're done. We can't do a condominium condo hotel that the building's being sued because a little kid got hurt in the pool. Now, if it's a minor infraction where it's a $200 thing where a guy cut his finger, they'll make exceptions on that. So there's another thing that stops it. Now, here's another big one. A lot of these condo hotels, they suffered in the collapse. They're coming around, they're getting healthier again, but they don't have a lot of cash on hand. If they collect $500,000 in associations from all the units per year, they have to have $50,000 in their budget reserve account. So we have to order a budget. We have to look at the reserve account. They all have reserve accounts. If it has 49,000, no deal. Got to have 50. Got to have 10% of the yearly association dues you collect. Then there's another one. You can't have more than 10% of the units owned by one guy. So if one guy owns a big chunk of the building, it becomes not eligible. If you have a 10 or 15% foreclosure rate, it becomes ineligible. So now that I've gotten rid of most of you, and I'm down to like 3 of you left that actually fit in all this, then you say, what's the rate? Well, let's say the going rate for a Fannie Mae loan right now for owner-occupied is 4%. You're probably going to be at 6% with a 5-year ARM, with a 2-year prepay, with a 1-point origination. Goodbye, all 3 of you. You all quit. You're not going to do it. So I've lost all of you already. So you guys have to know, if you're buying a condo hotel, expect this, and then therefore you won't run away when I tell you all these little scenarios. You've got to know that a condo hotel has risks. If you have a portfolio of loans and you have a condo hotel in it and the economy goes bad, that's the first thing you're going to let go, is that condo hotel. I promise you. And that's why they put this risk factor in there. I'm not on their side. I'm just trying to explain to you that that's the first place it's going to go, because it gets trampled on by little kids swimming and walking around with sand on the hallways and scraping their fingerprints along the walls and spilling their red juice all over the floors. And they're really hard to maintain a high quality of standard. So they get damaged, and because of that, you treat them more like a beater car that's in your driveway than your Porsche that you got sitting parked in the garage. So remember that. That's how condo hotels work. I'm your specialist for condo hotels in America. You call me at 630-915-7550. You go to gustanshow.com and watch our blogs and videos on this. And please like and share this video. Thank you very much.